Welcome. I'm RJ Martin, your financial educator and advisor, here to guide you through this maze of personal finance. Today, we're going to break down two crucial terms, assets and liabilities. I promise to keep it simple, engaging, and easy to understand. Let's talk money. When we talk about assets and liabilities, we are essentially talking about what you own versus what you owe. Imagine you're playing a game of financial monopoly. Your assets will be all of the properties, hotels, and houses you own on the board, while your liabilities will be the money you owe somebody when you land on their property. An asset is something you own that has financial value. This could be your savings in a bank, investments in stock or bonds, real estate properties, your car, even rare collection of stamps. These assets can either earn you money, like dividends from your stocks, or rental income from your real estate, or they can be sold for cash. On the flip side, a liability is a financial obligation, or simply put, money that you owe others. This could be your student loans, credit card debt, car loans, or even the money you borrowed from a friend for lunch yesterday. These are debts that you are responsible for repaying. Now you might be wondering, can an asset also be a liability? The answer is yes. The perfect example of this is your home. When you buy a home, it's an asset because it has value. You can sell it, rent it out, or live in it saving on rent. But if you've taken out a mortgage loan to buy this home, it becomes a liability. You're now obligated to make those monthly mortgage payments. However, that doesn't mean you shouldn't buy a home just because it may carry a liability. It just means that you need to manage your assets and liabilities wisely. The goal is to have more assets than liabilities, and this is what helps you build wealth. Think of it as a scale with assets on one side and liabilities on the other. Your job is to keep the scale tipped towards assets as much as you can. In essence, building wealth is all about owning more and owing less. All wealthy individuals have liabilities, and if you use liabilities backed by assets the correct way, you can grow your wealth at a greater rate. Just be sure you are not over-leveraged, meaning the amount of liability is too high compared to the value of the asset. And that, in a nutshell, is the difference between assets and liabilities. Remember, every financial decision you make can impact your assets and liabilities, and therefore your overall wealth. So think wisely, invest wisely. I'm RJ Martin, your financial educator and advisor, signing off until next time. Keep building those assets, reduce those liabilities, and stay financially savvy. Go talk money.